This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. We're also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. As I told you, I had a bunch of topics I want to talk to you about today. The first one is a class I took earlier this week, and this is a class taught by Steve Kitnick and Ray Gallegos, and it's entitled "What Every Real Estate Agent Needs to Know About Mortgage Financing." But what Steve and Ray did for us was they showered us with acronyms and taught us, first of all, what the acronyms mean, and then subsequently how it affects us. And I thought it was a very interesting class. So let's go through some of these acronyms, and I'm going to start with LTV. That's loan to value. Basically, that's how much of your purchase is the loan. So if your home is $100,000 and you're borrowing $80,000, your loan to value is 80%. DTI, and that's debt to income. Now, this is one of those ones where I never really got too involved with that because that's one of those ones that I let the lender and the client work out. But you need to have a certain debt to income ratio. In other words, you can't have more debt than income, obviously. You can't even have a certain percentage of debt to your income and still qualify for mortgage. The mortgage company wants to make sure that after you pay all your debts, you still have money left over to pay the mortgage. That's why they use that debt-to-income ratio. MIP is mortgage insurance premium. Mortgage insurance is a confusing thing to many people because they think, well, good, this is great, my mortgage is insured. Well, no, it's not you that's insured, it's the lender. The lender is insured such that should you default, this insurance company is going to help make them whole. PMI is the private mortgage insurance. What happens here is that when you have private mortgage insurance, it means that you have a less than 20% equity in your property. Usually, there's variances. DPA, and this is something we've talked about on the show recently, and I'm going to talk a little bit more about it later today. Down payment assistance. There are down payment assistance programs out there right now that you probably don't know about, or maybe some of you do, but they're very, very favorable right now. There's a bunch of programs here in the state of Nevada. AUS. AUS is Automated Underwriting System. And what that is what lenders use to quickly qualify a potential buyer through a computer program. And these automated underwriting systems help them to determine if you are qualified in short term. They can, perhaps even with just a phone call and a couple of quick checks, they can determine based on your current criteria whether you qualify for a loan, and if so, how much of a loan could you qualify for. The next acronym I want to share with you is NOO. Now, this is one I didn't know, but it makes perfect sense. It's non-owner occupied. This brings up an interesting conversation. 3 levels of occupation. There's, hey, I'm living in the home. That's one. I'm an owner occupant. Number 2, it's a vacation or second home. That's a different category. And thirdly is non-owner occupied. I'm not living there. I'm either renting it or I bought it for somebody else or something of that nature. That's a third level. And each level of loan has different parameters. Then one that came up, and this is interesting because it wasn't in their list, but one of the agents in the room brought it up, said, what about APR? And APR is the annual percentage rate. And when we close the loan, it's always a little bit higher than the rate you say, oh, I got 4.5%. But then you look on the paperwork, it says, well, 4.7239. You're like, wait a minute. No, I got 4.5. But the APR, what it does, it rolls in some of the costs, initial costs, and it annualizes that. And so it's a little bit higher, even though your effective rate, I think is what they call it, was 4.5, your annual percentage rate might be 4.72 or whatever it was.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.